All right, here we go.
Ready.
Welcome back to Liberty and Finance. We are delighted to have live and in person Andy Schectman, the CEO of Miles Franklin Precious Metals. This is a real live stream, live chat, guys. So if you aren't seeing the live chat right now, make sure you're on our YouTube channel. Make sure you're subscribed to our YouTube channel, and then you should be able to enter into the live chat stream and go ahead and answer your question, ask your questions for Andy there. And Andy, welcome and thank you for joining us for this live stream.
Pleasure's mine, Don. Again, thanks for having me, buddy.
Absolutely. This is always a privilege when we can do it this way, and our viewers love it. So
Me too.
I think it's a win for everybody. We already have two questions. Well, people have noticed I've themed the splash screen for this and the thumbnail that was sent out in our newsletter as the art of war, geo and political and financial and social. So we want to talk about I guess I have a list of some quotable quotes from Sun Tzu in his book, The Art of War. I know that you use that as the foundation of a topic, the keynote address that you gave at a Rule Symposium a few years ago.
Yep.
But I thought that actually some of those are very provocative in terms of how they exhibit what's going on right now in our world, this dichotomy between what you've pointed out as this global split between the financial edifice of the West versus the East, BRICS Plus on the East, if you want to call it that, although Brazil and others are in the Western Hemisphere, and the debt-based fiat modern monetary theory, whatever you want to call it, financial model that's been driving the Western world surrounding the U.S. and
Yeah.
Britain and so on. And it just seems like many of these are very pointed lessons, and they could even apply to just some real basic things about preparedness and stacking and all that sort of thing. So I have two questions that came up before we get into that are very specific, and then if we could maybe look at those quotes from Sun Tzu and see what they reveal about the art of war and what we should be doing now in this time, which it often feels now to many people that we are living behind enemy lines here, in that the people who are supposed to be our representatives, our leaders, seem to be doing everything they can to tear down our Constitution, our republic, our civil society, our financial futures, etc. So, first of all, there were two questions asked ahead of time. One was any significance that you might draw from Putin's visit to North Korea?
Well, I think it's very significant. It's you can see they're building a union of support and of countries together that have traditionally been at odds with the West. They're doing the same thing with Afghanistan. They are choosing relationships with countries that you could argue will find safety in numbers. And it's provocative, but you think about Putin, and if you just remove yourself from everything that's happening, he's a heck of a chess player. You can see these are moves that they're provocative, but look at the things that we have done and how we have provoked him. And so I think that this is just kind of a tit for tat response. And I find it interesting that the White House says that they're troubled with the deepening relationship between Russia and North Korea, and that they were quite certain that Putin would be seeking arms to support his war in the Ukraine. Yet, in the same breath, we've given $260 billion with hardly any congressional oversight to the Ukraine. We've given them javelin missiles. We've given them F-16s. Where I mean, it's this perception by the Southern Hemisphere that we are wholly hypocritical, and this is a good example of it. What is okay for the West is not okay for other countries, and I think that it's not to be it's not surprising to me, and I think you'll see more relationships like this fostered, by Russia and by other countries in their attempt to push back against the West. And I think he goes from here to Vietnam. And look, this should be expected. And quite frankly, we continue to provoke Putin, and I would assume that this will only get more and more and more provocative as time goes on, until some sort of a resolution, hopefully, allows cooler heads to prevail. But this is just This is just, as far as I'm concerned, a smart move on his behalf, if you look at it from his point of view.
We have another question here that was submitted by a viewer and subscriber. Would you please ask Andy if he could only buy gold or silver, which would it be and why?
I think if I could only buy one, I would buy gold because, and I know most people don't want to hear that, but it's the asset. If you look at this new unit that's coming out of the BRICS that was discussed at the St. Petersburg meeting and validated by the head of the BRICS New Development Bank and Sergei Glaziev, or Sergei Lazarev rather, and Putin. They had talked about a basket of commodities and a basket of currencies backing this new settlement currency that they're working on, but it was determined that it's too difficult to use a basket of commodities, so they have decided to use completely just use gold as the 40% backing in gold and 60% backing in the BRICS currencies, and this has been validated by Dilma Rousseff, who was the president of the BRICS New Development Bank. And so when you realize that gold's the only other tier one reserve asset in the world, when you realize that the central banks are buying it at a level that no one's ever seen before, I think gold, when the music stops, is the place to be. But with that being said, I will argue that silver is the opportunity of a generation. So if I had two trades, I would buy silver, I would let it run. And when the ratio between the two correct, I would then try to switch to silver. From an upside potential, I don't think you can compare what silver has to offer, but
Just an interruption. You mean hold silver until it runs and then switch into gold?
yes,
Okay,
because
right.
the ratio between the two is so historically out of whack. It's an anomaly. And, you buy silver right now at near 80 to 1, realize it's coming out of the ground at 7 to 1. It had been coming out of the ground for 5,000 years at 16 to 1. And, it's average price wise, man's price, not God's ratio, but man's price has been roughly 41 or 42 to 1 for 150 years. It's double right now, nearly its 200-year average, and well, what would it be right now? You're talking 11 times higher than it's coming out of the ground at. There are very few investments, assets, commodities that offer what silver has to offer, let alone the fact that it has plurality in demand in military applications and industrial applications and monetary applications. And we've talked at length about how it appears the commercial banks are trapped right now in an insidiously large short position that is lacking physical supply to fill standing delivery orders. And this is how these countries, I think, really understand the Achilles heel of the Western central banks is these massively leveraged short positions that they're having a hard time being able to round up physical silver to accommodate delivery orders. And that's what's different right now about the silver market. When these exchanges were originally developed, no one stood for delivery. And furthermore, the countries in the Southern Hemisphere didn't have the sophistication, the wealth, the desire, the coordination to stand for delivery. But it appears that's what they're doing right now. And it is becoming a real big problem being naked short in silver. So when you talk about upside potential, I think it's markedly higher in silver. But you said if I only had one trade, and I think when the music stops, if we were talking to our grandchildren 75 years from now, I think gold will be the anchor of a monetary system for a new system that goes on a lot longer than you and I are here, Dunnigan. So if I had one trade, it would be gold. If I had two, for sure silver, with the intention of trading to gold when the ratio normalizes.
Great. Okay, so now I've got some quotes from Sun Tzu queued up here, and what I'd like to do is I've got these broken into about 7 different sections. Go ahead and lay out, and sometimes I've combined several quotes of his that are really closely related together. So I'll introduce that, and then uh, we can think about how does this apply. Sometimes it might apply to the East versus the West right now, or I would say the fiat financial edifice versus the BRICS plus. Sometimes it might apply to people who are either thinking about preparedness versus people who are not thinking about preparedness, um, or it may have to do with countries that have been saving and on stacking up real assets versus going into debt, that kind of thing. Okay, here's the first one. He will win who knows when to fight and when not to fight. Ponder and deliberate before you make a move. Quickness is the essence of the war. There is no instance of a nation benefiting from a prolonged warfare. The whole secret lies in confusing the enemy so that he cannot fathom our real intent. Let your plans be dark and impenetrable as night, and when you move, fall like a thunderbolt. Does that trigger any thoughts for you about what you've been studying on these progression of events?
Well, yeah, I mean, you look at the BRICS and they've been doing things in a very regimented fashion, and they've been taking their time building what amounts to a very critical mass very slowly and very rationally. They haven't been rushing to do this and in a very stealth manner. Um, I think that's really one of the things that they are very good at is um, doing this in a way that will be very difficult to be challenged and not being overly transparent in their decisions and in how they are building this coalition. They don't announce really which of the countries are. They tell us that are 59 that want to join, but they don't tell us which. They tell us they're working on a common settlement currency. They don't tell us when they are going to issue it. They are ambiguous at best, and I think that's part of the deal. You take a look at the actions of Saudi Arabia, and it seems as though they are also playing both sides of the fence and using misdirection. You know, on one hand, they're still friendly with the West, but they turn down an invitation to the G7 meeting, while at the same time send their finance ministers to the BRICS meeting in Russia. So, you know, this is a deal where I think when you talk about standing up to the Western hegemony, this is something that will, this is, you know, kind of the little by little by little by little, then all at once theory, in that they're doing things in a fashion that I think is not really attracting too much Western attention. Look at how much the lack of any media attention in the West. Yet when they actually issue some sort of a common settlement currency, or when they bring into the fold potentially another 59 countries to join this, you're talking the majority of every person on the planet, the majority of the shipping routes, the majority of the commodities, not just precious metals, but base metals, and the majority of the rare earths needed, and also not only the majority of the rare earths, but also the processing of the rare earths that are needed for a green economy, for the battery production, as an example. I think what they do is indeed very much more like the art of war, the misdirection tactic, rather than right in your face and very transparent about it. Maybe the way that the United States is. So at least that's what I think about when I hear that phrase.
Yeah, this one's related, and I think for me it has something more to do with austerity and ownership of real assets versus and it's just also just ignorance of others versus knowledge of others, which in this dichotomy that you just described and you've been talking about for a couple of years with us, which side is better informed about the other. Here's a quote: "He who is prudent and lies in wait for an enemy who is not will be victorious. If you know the enemy and know yourself, you need not fear the result of 100 battles. If you know yourself but not the enemy, for every victory gained, you will also suffer a defeat. If you know neither the enemy nor yourself, you will succumb in every battle." That trigger any thoughts for you between the East and West?
Well, yeah, I mean, I think the West has shown them who they are. Who we are. We're a country that imposes sanctions. We are a country that goes around the world that is viewed as being hypocritical in the way that we do things, the way that we act, and I think they are using this type of overt aggression, I guess you could say, against us, even in the way, as an example, that Putin spoke at the meeting that they had with North Korea. He says Russia has always supported and will continue to support the DPRK and the heroic Korean people, and here it is, in their opposition to the insidious, dangerous, and aggressive enemy. So that's the way that we are being portrayed, and I think they understand who we are, and they are using that aggression against us. And this is what is bringing into the fold all of these countries, saying we know who the West is. Look what they are doing to us. Look at how they can play both sides, or how the rules don't apply to them, and how, they will sanction China for giving money to Russia, but no one is sanctioning us for giving money to the Ukraine. What's good for the goose is not for the gander. That would be at least what I would take away from that comment. And I think it is a hell of a rallying cry, actually. It is a convincing statement to countries that, never would have had the nerve to stand up to the West, or the wherewithal, or the coordination. But that's what this safety in numbers type of mentality is fostering. And I think we'll see more of that. It'll be interesting to see which of the 59 countries, or who the list is of the 59 countries that have already expressed interest in joining the BRICS. And I would bet a lot of them are doing it exactly because they know who the West is. They know who their enemy is. And that I don't think will change.
Here's another one, and this may have more to do with. I know we've talked to Alistair MacLeod, whom we both have admiration of, as far as who actually has the gold around the world. Appear weak where you are strong, and strong where you are weak.
Well, yeah, I mean, it's just like the Western media, talking about how China has stopped accumulating gold due to 1 month of numbers not increasing. This is the same media that for my whole career would have told us that the numbers that come out of China are not realistic, that they are massively understated, that they don't change for years on end. And they're the largest producers of it in the world. They've been using our trade imbalance for years to mine even gold that was uneconomical for them. So why would they tell us how much that they truly own? And when you talk about Alistair, he'll tell you they have 38,000 metric tons. The Chinese will tell you they have like 26 or 2,700, not 38,000. And here again, I mean, I guess you could say the same thing about the West, or are they just being deceitful in that supposedly we have 8,300 metric tons or whatnot, and has been audited since 1956. It is in the vested interest of all of these countries to not be transparent when it comes to something like gold. And when you look at the Chinese, who are the largest producers, the largest accumulators of it in the world, I would argue, just like the analysts from Bank of Montreal said, and just like the analysts at the IMF said, that China and India and these countries are accumulating and producing far more gold than they are telling us about. So I think that's exactly what they're doing, because they will issue. I do believe, if you believe what they're saying about this unit, which has been validated by the head of the New Development Bank, that it is 40% gold, it makes a whole hell of a lot of sense why these countries not only have been buying gold, but repatriating it. All of these countries from Africa and from the Middle East have been repatriating their gold. India just repatriated 100 metric tons from the Bank of England after buying 1.5 times as much as it did all of last year, just in the first 4 months. So there is a race to accumulate gold, but to possess it, to remove counterparty risk. And that in and of itself is what will ultimately be the impetus to break, if you will, the cartel stranglehold, the Western cartel stranglehold on the price of gold. And when you realize how the United Arab Emirates is in the mix in all of this, not only as a member of BRICS, but also as a co-developer of Project M-Bridge, which is the cross-border payment system that I believe will be used to run the new unit. This one of the biggest hubs of metals tradings. You got Shanghai, and you got United Arab Emirates as massive hubs for commodity trading, and which ought to very quickly, I think, when this all breaks, expose the London Metals Exchange and the COMEX for what it really is, and it is no more than a glorified Ponzi scheme, because all of these contracts, when you realize the LBMA admits to trading 10 times the amount of shares or trades as they post. They trade right now 292 million ounces of silver a day. And if they're 10 times understating it, that's almost 3 billion ounces of silver in paper contracts, which is 3 times plus the annual mine supply. And so when you talk about, this fractionalized system that could break, I think that's what we are seeing here. We are seeing a system where gold is taking center stage, and the repatriation from the Bank of England, which is the LBMA, and from the New York Fed, which is COMEX, which have been safe forever, These countries don't care. They want to repatriate it. And I think gold has a central role. And, this is why it was reclassified tier one. This is why they've been buying it. And they haven't been honest, if I had to bet, about how much they've been buying it. They use all sorts of opaque um, purchasing methods, and including sovereign wealth funds, and all of the trading on the London Metals LBMA is over the counter. It's not an exchange type of platform like the COMEX is, which means there's far less transparency, far less regulation, and it's mutual, bilateral. It's trader to trader. So I would argue that these countries have been accumulating gold far more than they're letting on, because it will have a very significant role. And I've said that forever. Why else would the BIS have reclassified it as the only other tier one asset? And why else would all of these banks not only been buying it, but more tellingly, repatriating it? The removal of counterparty risk, I think, is huge. And it will be part of a new system, a new common settlement system that allows all of these countries to use their own central bank digital currencies through the Project M bridge, but settle in a common settlement currency, which won't be the dollar. It will be basically gold, and it's being remonetized across the globe. So it would be in their best interest to keep it on the down low. You tell everyone what you're doing, and all of a sudden it becomes the hot trade, and you get crowded out of your own aspirations. So all of that makes sense to me.
All right, now here's one that I wonder if it may be related to what we're seeing regarding bail-ins, central bank digital currencies, which you just brought up, potential future Bretton Woods 3. Here's a quote. Build your opponent a golden bridge to retreat across. Those skilled at making the enemy move do so by creating a situation to which he must conform. They entice him with something he is certain to take, and with lures of ostensible profit they await him in strength. As
Well,
we're
that's a
looking,
tough one. Look, I think maybe it's just one of these deals where, you know, the West at some point, I think, would have to acquiesce, and um, they would have to acquiesce to what is a very, very large and growing chorus of countries expressing, discontent. It's interesting when you look at the Project M bridge; it has the capacity uh, to mesh with the CIPS, cross interbank payment system of the Chinese, the Russian payment system, and even SWIFT. It is using the ISO 2022, I think it is. I'm not the techie guy, but it's what all the stuff runs on, and it could integrate with SWIFT. And so I think what maybe they're saying is, you're forcing your enemy to realize that the dollar is on its way out. Gold will be the de facto settlement currency, and this would play in, I think, very hand in glove with what Rickards has been saying for a very long time, that as the value of gold goes higher, the brick settlement currency goes higher as they continue to print more dollars, and the dollar loses value against gold. It only strengthens the brick settlement currency. When you see Kristalina Georgieva, the head of the IMF, say that central bank digital currency not pegged to something would be fiat, maybe it just simply means that they get so far ahead of this new system that entices the majority of the world and of these 59 nations on top of the 10 that want to join, that the West has no choice to join in on the party. And maybe it only strengthens the BRICS platform, and actually something that they actually acquiesce and join themselves at some point. I don't know. I mean, maybe I'm just grasping for straws. That's about as tough of a question as I've been asked right there. But
well, the one that I was thinking on that one was it might be even domestically here or in the Western world. We actually have a viewer who is keying in on that as well. Fazdal says, Dunnigan, that sounds like CBDCs. Lure the general public in with a quote golden bridge of having their debt forgiven, and only then, but only if they would convert to a CBDC.
well, yeah, and
So
I'm okay. So yeah, that makes sense. I've been saying that for a while too. That I don't know if it's lured in by debt forgiveness, or they just allow the whole system to blow up, and that's what they say. Look, everything will reset and you'll start over, take the new CBDC.
mhm.
And I've been saying that in one way or another for a long time, because the people who you and I talk to every day would have no interest in taking a central bank digital currency. Now, granted, we represent a minority, but I think most people, given the option, wouldn't take the CBDC. So the question is, do you create an event where, let's just pretend interest rates went to 30% and blew everything up, as you know, inflation goes to 30% and interest rates rise to compensate 25% interest rates or whatever that number is, and the whole system resets. Yeah, I mean, there's your golden bridge. You have no choice. Sign on the dotted line, take the CBDC, which Lael Brainerd has worked on with MIT and developed it, that, based upon Biden's fast tracking it with an executive order. How do they get people to take the central bank digital currency? I'm not sure. Either there's an event or, again, yeah, some sort of luring. But Nasara Jassara telling people that their debt will be forgiven. Remember that someone's debt is someone's asset. So I don't know how that plays out unless the whole system blows up at once, and leveling the playing field and making everyone down to the same common denominator. And when you realize the majority of the debt's owed to the American public through Medicare, Medicaid, Social Security, government, military pensions, and look at who's been buying all of the bonds as the rest of the world sells it. The hedge funds, the mutual funds, the money markets, the banks, everyone chasing yield. And so we own the majority of the bonds that everyone's been selling. So if they were to reset the system, they're resetting it on us primarily. So there is your golden bridge. Yeah, start over. You're out of debt. Everyone starts from scratch, and we make you whole with the CBDC. I could see something like that.
Mm-hmm.
Certainly, it would not be straightforward. They would definitely employ some form of deceit or misdirection to get people to accept what would be something that most people wouldn't want to take, given their choice.
This next one to me has a lot. It speaks to me of what we've been talking about for a decade here, about preparedness, about stacking while you can, about preposition. What Rick Rule talks about, prepositioning yourself as a contrarian, even with some of the mining stock investments, that sort of thing. Plan for what is difficult while it is easy. Do what is great while it is small. In the midst of chaos, there is also opportunity. Any thoughts for you from you
Yeah,
on
well,
that?
yeah, absolutely. That speaks to preparation. That speaks to preparing, even though the times wouldn't say that you should. Reluctantly preparing, as you would say, and I think that's the problem that most people face in investing, is that they are too reactionary. Even the markets are too reactionary, and the people like us who are called tinfoil hat wearing preppers are mocked until the realization that we have been right. So I think it's like anything. You prepare when times are good. It's just like, the squirrel who spends all summer gathering nuts, acorns, so that he has it for the winter. Well, same thing is true here. And I think that's, part of the misdirection, if you will, employed by these countries who understand that for a long time the West has been suppressing, in particular, gold and silver, because it represents the canary in the mine shaft in terms of portraying a strong bond market and a strong dollar and a strong Western system, using that against us now by not allowing the price of gold and silver to accentuate itself, not allowing the real price to be known, by piling on to the short position and using that against us and standing for delivery. And that's really how they win. They play the Western game, which really is trying desperately to cling to the last vestiges of this system, this Keynesian system, and they have never let gold and silver run as a result of it, or at least even find its true price discovery, because it represents the kryptonite to the system. So you suppress the price of gold on the LBMA and on COMEX with tremendous amount of leverage, and no one stood for delivery. But that's where it ends. And these countries have been accumulating at the manipulated Western price and standing for delivery, to the point where the central banks, or the commercial banks rather, I think, are trapped or will be shortly, and are doing desperately whatever they can to get out of their shorts. So That would be a perfect form of misdirection and using the price of gold and silver to your advantage when no one's buying it, no one's talking about it, the West is selling it, people in the East aren't, and they're using that to their advantage. At the same time, they're using that low price as a subsidy, not only to accumulate, but to possess it and pull it off of the exchanges. It's actually very smart.
We've got some more questions being asked by viewers here. Fazdal asks, the quote, we've heard the quote, help banks cover their shorts. Couldn't they just cover their shorts with dollars or paper ounces? Or am I conflating JPM short covering with COMEX fulfilling loadout contracts? So when those who have concentrated short positions on the COMEX have to cover their shorts, do they need physical to do so, or do they just need to have started the cascade of derivative price action down low enough that the market, out of fear, has driven it down to where they can buy it back as a profitable trade
Yeah,
and
but
close out
not
their.
when you sell something short, that means someone takes the other end of it, the long, and that long may want to stand for delivery.
Mhm.
And that's the issue. You have the ability to stand for delivery. No one ever did, but now they are. And that's like, when I mentioned the other day, a few Fridays ago, where 7,560 kilobars of gold were shipped out to Brinks, Hong Kong. And in 2015, the CME launched a contract that is physically deliverable in Hong Kong, and they're gold kilobars, and they're bought by the bullion banks in the West, and then um, you know shipped out to the co-signed and shipped out to the Brinks Hong Kong off of Comex. And so from there, I would argue those gold kilobars are transported by armored car to the Shanghai Gold Exchange, where they are then sold for delivery, immediate delivery. So if someone takes a long contract, they have the right to stand for delivery. And just remember, whenever there is a short, there's someone else taking the long. And the long would typically be, normally it would be the managed money, but now you have the sovereign wealth funds and on behalf of this on behalf of their governments that are purchasing massive amounts of gold and silver and standing for delivery. And that's really the difference where it can become a problem. Sure, they could paper it over if there wasn't delivery requests, but the delivery requests alone are necessitating the finding of physical metal. And if you naked short, when you look at the LBMA, how the hell are they trading, nearly 3 billion ounces of silver per day? They're not. It's paper. And when you look at the COMEX right now on silver, it's rehypothecated about 1,600%. So there are 16 people holding contracts. Only one would get fulfilled if they all stood for delivery. Now, no one's all standing for delivery at once, but maybe that changes. If there is a failure to deliver, then how fast do people say, gimme, 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 gimme? And then what happens? So much like everything that the BRICS have done in these countries, they're methodical. They are not shotgunning because it cuts off your nose to spite your face. Keep playing the game as long as you can. Suppress the paper price, stand for delivery, take possession. And that's what they've been doing for 3 years, and it's starting to accelerate right now, especially in silver. You can see the numbers on the Shanghai Exchange are down to their lowest levels in years. And when that's gone, then where do they get it? Comex is down to, peanuts and 60 million ounces in the registered category, and 300 million, if we believe the numbers that are true, that are not unencumbered, that are not encumbered in London, yet they're trading nearly 3 billion per day. They only have 300 million they have 800 million at the London Bullion Metals Association, but 500 million belong to the ETF. So you got 300 million backing 2.9 million per day. 2.9 billion trades per day, ounces. So you get these countries who hold these contracts saying, no, I don't want cash, I want delivery. There's a problem.
We've got another question here. Make sure. Yep, I'm not muted. Good. We've got another question about the BRICS, in that Saudi Arabia just did not renew their petrodollar agreement. That was just a couple days ago. What is this going to do to the dollar?
I think what it does is it slowly and continually erodes its value and its demand. Um, the dollar's not going away today or tomorrow, but when you realize that these countries can now use any currency they want, it starts to chip away at the settlement value of the dollar. And again, there hasn't been a challenger to the dollar, but it appears very, very, very obvious to me that commodities, in particular gold and oil, which seem to be remonetized across the globe, are replacing the role of the bond market. And in particular gold, but a bond that can be weaponized and stolen or confiscated the way that they're doing right now with the Russian assets and inflated or defaulted upon. I might be one of the few people that really believe rates are going way higher. I know Martin Armstrong does too, but everyone talks about rates being lowered. I see rates going higher ultimately. And, I think this is a game that, will not end very well for people who are holding traditional assets as rates go higher. And I think that's going to happen. I really, truly do. I think rates will go much higher because even if the budget was balanced today, who's going to pay for the 150 trillion in unfunded liabilities, and who's going to continue to hold the US dollar that can be weaponized, that's going to see rates rise, where a country that's chosen inflation over austerity, but as rates rise, it's going to destabilize all of the bonds in circulation. So between the issue of default, of inflation, of instability, where last year was the first year in 45 years where gold had less volatility than the bond market, a country that has chosen to weaponize its treasury market, these commodities are becoming more valuable than the currencies backing it. So yeah, I just see a period of time where countries are going to trade with local currencies with one another, and use gold and oil as a default settlement, which will continue to erode the value of the dollar in all of the trading and the settlement, and then completely erode the reserve status as bonds are sold and commodities are purchased. Now, when they issue a gold-backed settlement currency, that really changes the game because, I guess the bottom line with all of this is that they trade in local currencies, they settle in this common settlement currency, and the reserves would go into gold instead of into treasuries. The combination of that chips away tremendously at both aspects of the dollar hegemony, the reserve and the settlement status. And the pushback against so many of these dollar bulls is the bond market, the bond market, the bond market. But who the hell wants to hold any of our treasuries of any duration? I don't know anyone that would be foolish enough to do it. And so I think what these countries have done very quietly and very stealth, if you will, is to, in many ways, replace the bond market with gold, with oil, with commodities. As Zoltan Pozar had said, so when you talk about Saudi Arabia no longer accepting just dollars, it only increases the lack of settlement with the dollar, and all of the gold that is being purchased, and the admission by the BRICS New Development Bank that this unit that they're talking about will be 40% backed by gold, only incentivizes gold to be accumulated much, much more than the treasury market. So yeah, I think it's real. And I could see a point in time where it becomes a massive dumping. It starts out slow. The realization becomes that, the West is losing control and more nations are joining onto the BRICS. More and more nations are settling and trading in local currencies and settling in gold or a common settlement currency. That's the little by little by little, then all at once. We haven't seen the all at once, and it's who knows how far away it is, but this would light the fuse, if you will. And I think it's equally as interesting when you realize that, yes, not only did they not re-up the contract, but they turned down a meeting to the G7 and at the same time sent their finance minister to the BRICS meeting in Novograd. So they're making their position very clear on this. And when you look at United Arab Emirates, who was admitted into BRICS right alongside Saudi Arabia, the seventh largest producer of oil in the world, an OPEC country, a hub for trading commodities. They said they don't want to take dollars for oil anymore either. So little by little, the lack of settlement and the lack of bond purchases with the excess is really the kicker. And I would argue a lot of people don't see that clearly. These dollar bulls and these analysts from from UBS, and there was one from Charles Schwab. They're all coming out and saying it's a nothing burger because the bond market is still the supreme place for all the money to go to. Well, I disagree with that, and I think it's beginning to lose, and maybe already has, a good deal of confidence, a good deal of allure. And much like the way they do everything, they are slowly detreasurizing. They're not dumping. China's down to just over 700 billion from nearly 3 trillion. They are doing it methodically. And when the time is right, and when they have enough critical mass, enough participants, that's when you start to see a real problem for the US dollar. But this is the very beginning of it, for sure. The lack of media attention is really troubling and disgusting as far as I'm concerned as well, when you really don't see any of this in the mainstream.
Yeah, that's a whole nother thing about the mass media completely reneging on their duty and their obligation to be journalists for the past decade plus. Uh, I just realized the time. If we could quick hit the specials before people who might have to leave early before we can hang out for another 20 minutes or so. But let me just get these up there real quick so people who may not be able to stay should be sharing right now.
Yeah, I mean, kilo bars, they're cheap, very cheap. As far as I'm concerned, coins have become a little tougher to get. We did just get in a whole bunch of silver maple leafs, fortunately. I know they're not on here today, but coins are getting tougher to get. They really are. And so when you look for value, those kilo bars, those Italian kilo bars are Ital Preziosi, are fantastic and a very good value. And there are a lot of people who will tell you that platinum mirrors silver in terms of its allure, its price relationship to gold. It's much more rare than gold. The mints have really not made much in the way of coins over the last several years. And from a value standpoint, when you look at precious metals, it's arguably right up there with silver in terms of its overall value in relation to historical relationships with gold and its price relationship. So yeah, this is a good way to buy some very flexible, tradable, small platinum coins. And look, I don't own a ton of platinum in relation to my gold and silver, but I do own quite a few of these 1/10 ounce coins because I think that they are really keen for trading. And I think people don't think about trading when they think about trading, it's usually gold or silver, but these are really eye appealing and people really like them. Most people have never held a platinum coin in their hand before. So from a standpoint of barter, I think they are intriguing and $59 over melt, that's as cheap as I've seen them in years.
All right, I'm going to stop sharing those, and I got another question queued up here from the audience. Indy asks, when we say buy gold when the silver ratio is more accurate, I fear there won't be any available. Your thoughts?
It's a possibility. And I say that to people. That's the fly in the ointment. And that's why pigs get fed and hogs get slaughtered. It's coming out of the ground at 7-1. It's averaged. Bill Holter talks about God's ratio and man's ratio. Currently, God's ratio is 7-1. It was always 16-1, but man's ratio for the last 100+ years has been 42-1 on average. When you get anywhere near that number, you start trading your silver into gold. Maybe not all of it, because it would still be 6 times higher than it's coming out of the ground at, but some of it. It's a double. And I think it's very, very, very possible that we will see that. I mean, I tell the story all the time. The first YouTube video I did was 2010 with Bix Weir. It was 85-1. It was the second time in human history it'd been that high. I said, Bix, we got to do a video. And I told everyone, sell me your gold. I'll sell it to the market. You'll get 85 ounces of silver, in essence, when you factor in the premiums a little less. And within 7 months, anyone who would have done that would have only needed 37 ounces to go back with $50 silver and 1915 gold, just below its 200-year average. So it is an issue. It is something to think about. It is the one potential flaw in the argument. But from a calculated speculation, I don't know that I've ever seen a better one. And if you feel, I don't want to call it gambling, but it is a speculation. If you feel, as I do, that the odds of it happening, at least the ratios correcting, the law of averages, a regression to the mean coming into the fold, it's to me as good. It's a trade of a generation, maybe. It's a trade of a decade. I don't know how else to say it because you don't get opportunities like this very often where a double would be just returning to its average. Usually doubles require massive amount of risk and This would just be being average and getting back to what it's averaged for 200 years. So yeah, I like the trade, but it is something to ponder and it could happen.
We've got a question here from Cool Boy Wizard. Is the USA accumulating gold like the rest of the world? If not, why not?
Well, they haven't updated their numbers, but I would ask, where did the 12 billion in the Ukrainian gold go that they sold? Where did Gaddafi's gold go? Where did Hussein's gold go? I'm not saying we took it, but they haven't updated their numbers in forever. And as far as I know, we are not accumulating any. But, you know, here again, going back to where we were before the art of war, are we accumulating it and not telling anyone? Is this why the US Mint is so horribly producing silver eagles over the last several years? Are they stockpiling silver and don't want to tell the world? Who knows? If I were advising the US government, I would certainly tell them, don't let on to how much gold you have, certainly because it doesn't do any good to let the whole world know that, yeah, we have a whole bunch, or maybe we've leased it all out. So I don't know, but I would argue they would be foolish to tell the world how much they have been buying and or accumulating. So I don't know. Guess we'll have to see.
We have a pair of questions here, one from two different people. I'm going to tie them together. Cryptic Gamer says, "What about junk silver, Andy?" And Tinfoil Hat Plumber says, "It's all about constitutional coins now. They are finite."
It's the best value in silver, hands down, not even close, as far as I'm concerned, because when you look at silver eagles, when they were up to 14, 15, 16 bucks an ounce everywhere in the country, junk silver wasn't a lot below it, 10, 11, 12, 13. And
Hmm.
then everything, as we've talked about, corrected. Premiums went back to much lower levels over the last 6 months. And then they've come up a tiny bit. Eagles went up again. Junk silver is below all of those coins, and it was higher than all of the other sovereign coins, with the
Hmm.
exception of the eagle, for years, 2, 3 years during the pandemic. And now it's below the other sovereign coins. And Bill Holter talks about it all the time. Jim Sinclair, I've talked about what Jim Sinclair said about the American coins, and how his family is the Goldman and the Goldman Sachs, and someday there would be a confiscation that the government would not take American-made coins. So certainly, you could argue American Eagles and junk silver would be the way to go on that level. But from a standpoint of value right now, basis the last 3 years comparison, it's by far the best value of any silver coin that you could buy right now, at least in terms of the way it was priced in relation to Eagles and other sovereign mint coins for the last 3 years.
And I'm looking. There's a lot of comments on here. Looking for another question here. Well, there's a general discussion between several people. Robert Furderer says, "Why does the stock market keep hitting new records?" We have crack up boom question mark from Pop and Puff. Steve Sapp says, "Robert, they're printing $1 trillion every 100 days. That money has to flow somewhere." And someone says, "Just make sure you make it out before it crashes."
Yeah, but I
Uh,
mean, if you look at the Russell 2000, the majority of the stocks are down. You see a handful of stocks. You see GameStop, you see Nvidia, you see Apple. I mean, there's only 3 or 4 stocks that are leading the way. The lack of breadth in the market is scary and very dangerous. It keeps on going higher. And to that other comment, it's true. I mean, we've printed so much money in the last several years, that money has to go somewhere, and it's gone into equities. And a lot of the money that would have, or that was in precious metals, you look at the ETF outflows, have gone into those kinds of stocks chasing yield. Now, Bill Holter will tell you, or has told me that, well, a lot of that outflow would be the central banks taking, or the sovereign wealth funds and the commercial banks taking possession of metal, a lot of the ETFs being very opaque, again, using the art of war, misdirecting. Some of that is true, I would argue. But again, you have a handful of stocks pushing the indices higher based upon their weighted average. It's dangerous as hell. And look at the Russell 2000, which is a far broader and better snapshot of the economy, and they're not doing so well. So, yeah, I mean, if you feel like gambling and speculating, it's been a hell of a run so far. Be careful. You're right. As they say, get out before they all collapse, or start taking some of your profit now. Profit's not a 4-letter word. Because I think when you look at a situation where all of this easy money and all of these low interest rates that we've had for years have been incredibly bullish on creating asset prices that lack price discovery. They've gone to levels that we can't imagine. And just as bullish as it was when they went up with easy credit and tons of money, low interest rates, it will be equally as devastating, if not more, when you see a massive credit contraction. You start to see banks fail because of the commercial real estate problem and the over leveraged and undercapitalized banking system. They will rein in their credit. And as credit starts to tighten up, you'll start to see, I think, it affect the economy much greater. And when we see this start to become systemic, it could be a very fast
Mhm.
collapse because only a handful of stocks are leading the way. You don't have a broad support under it. It's like an inverted pyramid. So I would say caution certainly should be priority number one. And profit's not a four-letter word. If you have some profit, take it out, sit on the sidelines, or buy some gold, or buy some assets, pay off some debt, whatever it may
Mhm.
be. I think it can be very dangerous if it keeps on going much higher, based upon just about every form of measurement metric.
Yeah, I just got off an interview today with Gregory Mannarino from TradersChoice.net, founder of TradersChoice.net. And one of the quotes that I wrote down while I was interviewing him, he said, "We are in a full-blown banking crisis right now that has not been announced. The system is coming apart." So you're right. The high-flying indices are driven by just a few leaders, and you have 40% of the companies are zombies. They can't even pay their own debt, let alone when the debt gets uh, rolled over at higher interest rates. So
And then
it's
you
a
start to see the systemic action where the banks who can hold all this debt
Mhm,
collapse, and
mhm.
and it starts to pull everything down, and then credit immediately contracts and it snowballs. It's a debt loop and a doom loop.
And one more word in there you got to add into that whole sentence is bail-ins.
And bail-ins that people have no idea about. Now, you want to talk about inciting panic? The people watching the show are more insightful than most because they've listened to all of your guests talk about bank bail-in legislation written in the Dodd-Frank Act. And most people I talk to, I play golf with some very successful guys here that own businesses, and I've talked with them, many of them, during the round, and you know what a bail-in is, and no one knows what it is. I mean, half of these guys have millions and millions and millions of dollars to run their operation in one bank account, and the amount of chaos that would ensue if a major bank collapsed. Look, FDIC has 128 billion in assets. That's backing 18 trillion in deposits. One big commercial bank collapses if they sacrifice, like a Bank of America, at the altar, to consolidate all these banks, to create a bank run, to freak everybody out. If indeed they actually were to do something like that, the amount of chaos that would ensue as people realize that you can be bailed in and everyone tries to pull their money out at once, it would only collapse the system further, sucking all the credit away. Yeah, this could be very, very, very dirty and very quick as far as I'm concerned. So all of these things that we see around us are all connected one way or the other. And, you know, Putin visiting North Korea, tensions getting stronger and stronger, submarine off the coast of Cuba, tensions getting stronger and stronger. All of the problems that we see now, they're talking about, a draft for kids under 26 years old, a mandatory draft. Um, Problems with the banking system, problems with the immigration system, problems with Saudi Arabia, problems with, I mean, all of this stuff is connected. And so to focus on a stock market where a couple of stocks are holding the whole thing up, when there are so many problems around us and just focused on the spinning wheels, is very dangerous. And this is the point where pigs get fed and hogs get slaughtered. I think if people were holding these stocks right now, with all of this profit, expecting normalcy bias to kick in and everything to be peachy, I think it will go down as a monumental mistake. Now, I'm not saying there's going to be a market collapse tomorrow, but when was the last time we've really had a market that was allowed to correct? And they bailed it out in '08. They bailed it out in 2020. They continue to bail out these markets and the banks and everyone else. Well, bailouts are illegal now, supposedly, and there will be a correction, like a forest fire, that cleanses the excesses that have not been allowed to express themselves in a very, very long time. And it's a coiled spring. One of these days it breaks. So Gregory is probably right. And I think it emanates from the banks because of all the debt, because of all the credit, because of all the over leverage, and because of the undercapitalization. It's a very dangerous environment, no question about it.
I'm going to pop up the screen shares of the specials one more time. And meanwhile, well, I'll just do that. We'll do that first. We'll hit that. And then I got one more comment from a viewer that's pretty interesting. So back to your kilo bars.
Yeah, they're really beautiful bars. The Italians don't do anything that's ugly. And when you talk about a good value, it is a great value right now for just getting bullion content. And a kilo bar is 32.15 ounces. It's small enough to not, dramatically curtail any type of utility. They're functional, and they're a very good value when you realize that coins are going to cost you somewhere in the neighborhood of between $1 and $2 over more per ounce. And you're talking about Eagles as much as $5+ more. This is a good way to get a lot of content without sacrificing your utility. And they're really nice looking as well.
And
And
the
again,
10th ounce
platinum,
platinum Brits. Yeah.
platinum's been overlooked. Platinum is massively undervalued in its relation to gold. And what better way to do it than some small tradable coins? And I'll tell you, like I said, people have, it's one thing to look at a gold and a silver coin. Most people I know have never held a platinum coin. They often inspire a lot of oohs and ahs, and I like them a lot. If you're going to use things for barter, don't ignore platinum. It's cheaper than gold, and it's every bit as fungible, and it's a neat thing. So I like them a lot as well. Everyone should have a little allocation to platinum in their holdings anyway.
And then the comment I wanted to share from viewers was from several that were talking back and forth about the concept of could Miles Franklin consider offering a monthly subscription plan where clients would commit to a monthly rate, whatever it would be. There could be different levels, and they would get a mystery bag, mystery box shipped to them once a month containing that much value of gold or silver,
No, I'd be
whatever.
happy to do that, and whether it be a mystery box or something that is defined, I think we do have people who do that, and I think that's the best way to accumulate it. So I've been doing it for 34 years. You get on a regimented plan and you just do it. Let the laws of compounding work for you rather than against you. And I have a couple of my clients who have been doing this for at least a year or two with their younger children.
Mhm.
And they spend, $500 a month or whatever they're doing to put money away for their kids. And honestly, I've said it and I'll say it a million times that when my father said that to me 34 years ago, I kind of laughed it off. But I will tell you, I've never been given a better gift ever to allow yourself to prioritize yourself and your future um, by being regimented. You don't even miss it. And if you don't do it, time has a way of catching up with you, and you have to pay yourself first. As my grandfather always said, pay yourself first, whatever that amount that works out to. Yeah, you could buy $100 every week if you want, $100 every month if you want, whatever you can do. We would be happy to help you. And I think it's a really damn good idea, to be honest with you. And the laws of compounding are amazing when they work in your favor. And it doesn't have to be interest, it can be time as well.
So I think what's being asked for is could we make it an automatic, like set it, forget it kind of a program where it automatically happens? And I don't know because right now, or every time we lock in an order, it has to be with a verbal commitment on the phone with the client to say, yes, the funds are available. Yes, I want you to lock that in right now. So one way to accomplish it that I'm aware of is just inform your broker, your Miles Franklin broker, to put you on a monthly schedule. They'll put you on their calendar. They'll call you once a month to get it done very, very efficiently. But I guess the question, I think the way I was interpreting it was having like automatic 100, $500,000, whatever
Well, I do
levels.
it automatically. I have clients who tell me on the first of every whatever, or 15th, buy me $500 worth of silver coins, whatever you think is best, or buy me 500 in silver maple leafs, or, and we do it. And so and if we use an ACH, which is a blank check voided check, routing an account number. It's an automatic check hold. We can run the check through US Bank for you for free, and it
Hmm.
processes that way. So all someone would have to do would be, I guess, to send a copy of a voided check with an email saying until otherwise instructed on the 15th of every month, please get me X amount of gold or X amount of silver. We have no problem doing that. And I think it's a great idea. I truly, honestly do. I think it's a wonderful way to build wealth without much effort, and we'd be happy to do that. I know I do it personally for people, so I have no problem saying on behalf of my company, let's do it. Reach out to us, tell us what you want to do, give us a voided check, and you don't even have to be involved. We'll just send you a copy of the invoice on that
Hmm.
date, or by monthly or monthly, whatever you want, with what's coming, and we'll run the ACH. It's as simple as that. You don't want to use a credit card because you're going to add 4% cost to it. You could if you wanted, but an ACH off of a checking or savings account
It's
would be the
free.
best way to do it.
Yeah, high five to Cryptic Gamer for bringing that topic up and others for piling on. It sounds like it's pretty popular on the stream here. So you're on my team, Liberty and Finance, 888-81 Liberty. I or my sons can help you set up that, no problem. And it sounds like we can make it happen. So
I
Andy, just
love
got to
it.
thank you for joining us. We're past the top of the hour and just want to
Yeah, no,
thank.
sorry, my voice is, it's kind of been a long day today on several levels. So I'm sorry if my voice is cracking a bit, but I always love the live streams done again. And I know I'm hoping that we get to do one in a few weeks here together in Boca, like we did last year at Rick's conference. I'm looking forward to seeing you, and it would be fun to do it live. And I hope that maybe even we can do audience participation. Some of the people who maybe come to the show who watch this could even be part of it. So whatever, I'm looking forward to doing it again. But I'll tell you, things are changing faster than I ever would have. I always joke with you about that, how fast things are
Mhm.
changing, but it's amazing how much happens in the span of a week. So it's getting interesting. I look forward to continue to talking with you and everyone else out there about it, and appreciate it very much.
Thank you everyone for being on the call and on the live chat. We've had many hundreds of simultaneous viewers out there, and just absolutely great to have you all out there. We had 1,292 views so far on the live chat. And Andy, thanks for hanging there with us. And everyone, you make this happen. Make sure you forward this. As soon as we get off, it'll show up as a video that can be shared on YouTube. And please do share it. And there were plenty of comments. I didn't get a chance to tell you, Andy. A lot of people were thanking us for this conversation on the live chat along the way. So,
Well, it's always my pleasure, Dunnigan. You asked some really crazy questions, when you try and process what Sun Tzu was saying in the 5th century BC and try to, you know, string it together with what's happening. I hope I did okay. It's tough. You certainly, I will say, you put my feet to the fire, but I love that book, and I think there's a lot to learn from it. And that's why it's taught at major business schools around the world and major law schools on corporate hierarchy and formulating arguments. And this is why it's mandatory reading at West Point and CIA. And it's a book that has a lot to teach about the way things are conducted. Any opposition, there are more ways to skin a cat, if you will, than being completely direct. So I think it was worthy of discussion, and I appreciate it and look forward to picking up where we left off next week,
well,
Tuesday.
you kind of started it because when you did your keynote address at the Rule Conference on the Art of War as your basis, and it's just been nagging at me. I just thought, I think that would be a good lens to which to look at the current situation that we're in. And I'm grateful that you were a good sport as always
Hmm.
on fielding
Well,
it for us. So
good.
thank you.
You got it, my
All
man. I
right,
hope
all right.
everyone has a great evening.
Take care, everyone. Okay, we're done.